We are about to witness one of the greatest opportunities in the stock market, and everybody who is watching this video will be able to take advantage out of it and will be able to make a fortune. And if you do not, it's only going to be your fault. Because here in this video, I'm going to tell you exactly why the stock market has the biggest opportunity or the biggest chance to explode next year. And if it's going to explode, you have to start investing right now because that's when you take advantage out of it. And in this video, I'm going to give you all the reasons why that's going to happen. Now, by now, everybody knows that Trump won the presidency and now he's going to be the next president of the United States. And we know a lot about Trump because he has already been a president and we know a lot about his policies. So if you go back to his last presidency, you'll find out that the S&P 500 did a fantastic job. During his period, it grew by around 70%. Now, 70% might not seem a lot, but it's actually a lot given the fact that even houses at that time did not grow as much as the S&P 500. And S&P 500 is the safest investments out there. I mean, S&P 500 represents the top 500 US companies. We are talking about the companies that are holding the United States economy or the US economy. And the US economy is the largest economy in the world that makes the United States the United States. And that's why if the S&P 500 grows by 71% in a period of 4 years, you can say that you are making one of the greatest investments out there. Because historically, the S&P 500 grows by around, let's say, 8 to 10%. And now in a period of short 4 years, you can grow it by 70%. That is insane. And that's because Trump had a lot of policies that were pro-business, that were pro-economy. Instead of waging wars or doing something like that, he was focused in order to make sure that the economy grows. And if the economy grows, then the companies that are part of this economy, their sales will grow, their revenue will grow. And if that happens, their valuation in the stock market will grow as well. Now, you might have whatever opinion about Trump. I don't really care. What I care about is that how he led his first administration. And during that administration, he did not start any kind of wars. Yes, the US was still in a lot of conflicts all around the globe, but those conflicts were started way before he became the president. And yes, at times he was extremely harsh with his enemies. He was actually throwing some literally like some names out there on Twitter, for example, calling the leader of North Korea as the rocket little man or something like that. But he did not hesitate to sit down with him in one room and shake hands and come to an agreement so that there will not be any kind of wars. The same thing would be said about all of his Trump presidency. And that's why the stock market grew tremendously. So let's take a look at what Trump might do in the next period of his presidency and how that will impact the stock market. Now, first of all, one of the most important things that we always have to pay attention is the fact that the Federal Reserve or the interest rates that are set by the Fed will have the biggest impact on the stock market. Maybe not much on the economy. I mean, of course, they will have much on the economy as well, but the stock market will immediately react because unlike the economy will take some time for the interest rates to reflect on the economy. But when it comes to the stock market, investors quickly realize what an impact that will have, for example, on the market, and they will take actions now. And those actions that take now, either, for example, they will buy more stocks or sell stocks, that will immediately have an impact on the stock market. Now, to just put it in very simple words, lowering interest rates will increase the valuation in the stock market and vice versa. Raising interest rates will collapse the market. Now that sounds very simplistic explanation of how it works and it sounds childish, but we already talked previously in previous videos about why exactly it works like that. For instance, lower interest rates are going to increase future free cash flow of those businesses. And if the future free cash flow rises, that will impact positively on the valuation of those companies. Lower interest rates will make it easier for companies to access capital. Lower interest rates will boost spending within the economy, which means that higher revenue for those businesses. So there are a lot of reasons, and we are not going to go deep into those reasons. And by now, you already know that inflation has cooled down in the United States, and the Fed already started lowering interest rates. In September, there was a 0.5% cut In just recently, there was a 0.25% cut. And it seems like by next year, when Trump becomes the president, he understands that he wants the economy grow under his administration, especially it is going to be his last presidential term. And he's going to push probably on the chairman of the Fed in order to lower down interest rate, especially when inflation has cooled down. Now, some people might say that, well, Jay Powell is not going to listen to him, as he stated. It's one thing what they say on public, and it's an entirely different thing what they actually do behind the scenes. Because if you actually pay attention, Jay Powell's term is going to end by May 2026. That means that if he's not going to listen to Trump, he will be replaced by Trump. And the chairman of the Fed is directly chosen by President of the United States. Yes, of course, he's going to choose somebody who who's capable of leading the Fed. But if he wants to actually keep his job, then he might have to cooperate with President Trump. And if he does not lower the interest rates, Trump is simply going to replace him with someone else. Especially inflation is down. I mean, why wouldn't you lower interest rates? And that is going to positively impact the stock market. So I wouldn't be actually surprised, because right now the rates are about 7.75%. So if by January of next year, or let's not just by January, by summer next year, if interest rates will be lowered down by another percent, that will bring it down to around 3.75%. So during Trump presidency, by 2026, I wouldn't be surprised if rates will be lowered down to like 2.75% or something like that. And that will have like a really positive impact on valuations in the stock market, and the stock market will actually grow substantially during that period. Now, another thing to pay attention about Trump presidency is that he made it clear that he wants to end all wars all across the globe. And that is something you have to admire about President Trump. I mean, whether you like him or you hate him, he made it clear that he wants to end the conflict in Europe. He wants to end the conflict in Middle East. He wants to end conflicts all across the globe. Now, from one side, any kind of a war improves it impacts positively some of the businesses out there. For example, the military-industrial complex. Those companies make a lot of money when the US enters any kind of a war, because the demand for weapons increases and their sales rises and their valuations in the stock market rises as well. That is one way to make money. But those are just a few companies out there. There are like a lot of companies. The most of the US economy is not the military industrial complex. We are talking about Apple. We are talking about Microsoft. Like most of those tech companies don't even want war. So during those stability, yes, the military-industrial complex is not going to make a lot of money, but most of the US companies, especially tech companies, are going to make more money, because there are going to be less wars and more cooperations, and the business is going to boost after that. Especially the second day when he actually won the presidency, he actually contacted I think the leader of Russia, and they actually came to an agreement, or some kind of an agreement. Of course, it's not finalized yet, but we'll see how it's going to end after that. Another thing we have to understand is about the difference between the business mentality and the political mentality. You see, when you are in a business, the only way for you to win in a business, you have to know your numbers. You have to cut unnecessary spending. You have to you should stop wasting money. If you don't stop wasting money and you waste your money, you are going to go out of business and you will get bankrupt. That it's as simple as that. But a politician does not think like that. If you spend your entire lifetime being a politician, all you did is that you didn't really work for that money, and that money simply came from taxpayers, and you simply take that money and you start spending it however you want, whatever you want, without understanding the true value of that money. Well, a business person understands that why waste all of that money on unnecessary war, where you can actually take that money, invest it in the infrastructure, build factories, or bring manufacturing to the United States, or anything like that will boost the economy in the first place. Now, but most importantly, I think Trump emphasized a lot on the fact that he wants to deregulate the market. He wants to see a lot of deregulations, because over the last 20 years, there has been a lot of regulations imposed. And one of the ways, or they're probably one of the smartest ways, I actually really like the way he approached this problem, is by creating a committee or a department that is going to work on the fact that they will cut spending in the US government. And according to Elon Musk, they will be able to cut as much as $2 trillion out of the government. The United States right now, or the last couple of years, has been spending around $6.5 trillion, and the income of the government was around $4.5 trillion. So by cutting those extra $2 trillion, for instance, they will get rid of a lot of agencies, they will get a lot of regulations, they will make a small, efficient government, and they will not get a lot into the business. So when you have a lot, let's say when you have less regulations, it means that you need less permissions to do business. You need, you simply have to follow less rules in order to do business. That will encourage more companies to do business. That will encourage, for example, if the process of hiring somebody is so difficult, less people will hire people. So if you get rid of all those regulations when it comes to hiring people, it becomes easier to hire people, cheaper to hire people, and companies will start hiring people. Let me give another example. The oil and gas industry, for example, is highly regulated in the United States because we want to lower down, like, let's say, the carbon footprint, right? So because we care about the environment. So there are a lot of regulations in order to make sure that those companies follow in order to pump oil from the ground. Now, those regulations make it more expensive, much more difficult to do that. But when you get rid of those regulations, suddenly all of those companies can drill as much oil as it's possible, which will flood the market with a lot of supply. And given the fact that demand stays the same, the prices of oil are going to come down. That's just one example to show to you how deregulations is going to make it easier for companies to do business and will grow their businesses and their valuations, therefore, in the market. Now, another thing to pay attention is that this is probably the most important thing that Trump has been talking all the time, is that he wants to bring back manufacturing to the United States. And it has been one of the most fundamental theses or the promises that he made on his campaign trail. And the reason he does that is because he has been talking about this all of his probably professional career, that he wants to bring back manufacturing to the United States. And you see, the last 50 years, like around 50 years ago or so, or probably a bit more than that, US companies realized that they can simply ship their manufacturing to Southeast Asia, where the cost of labor is significantly cheaper than it's in the United States, and they will be able to make their products at a fraction of the price and just bring them back to the United States and sell them at the same price, making a huge profit and cutting a lot of cost. Now, what you need to understand is that over the last 50 years, those Southeast Asian countries became some of the wealthiest countries in the world, which means that labor is no longer as cheap as it was in the past. So, for example, let's go back to China in 1970s and 1980s. So the average Chinese would spend like $1 a day or something like that, or maybe even like $20 a month, around those numbers. Now, fast forward to today, China is the second largest economy in the world. China has a GDP of like $19 trillion, and Chinese cities are some of the wealthiest cities on the planet. A lot of those Chinese cities are much wealthier, even US cities, which is why it's no longer as cheap as it was. Yes, it is still cheaper than the United States, also because of the fact that those supply chains have been built by Chinese and US companies in that part of the world. Also take Thailand, Malaysia, the entire Southeast Asia. Some of those countries are still poor. Some of those countries where the cost of labor is still cheap, such as India, for instance, but nonetheless, that the cost has been rising dramatically over time. So it makes sense to bring those manufacturing back to the United States. Of course, those companies are going to lose a lot by doing something like that. And that's why Trump came out with an idea that he wants to lower the taxes for companies who will bring back manufacturing to the US to around 15%. Now, 15% for a country like the US is extremely low. Like, you have no idea how low is that. Now, if you take taxes in Europe, they're around like 50%. 15% will put the United States at the same level as countries such as Ireland or Dubai, where the tax rate is around 9%. I mean, Ireland probably has like a tax rate of 12%, which is very, very close to what Trump wants to do in the United States, which means that if you bring manufacturing to the US, you will simply pay less taxes and you will have your money in the United States and not outside the United States. And given the fact that Elon Musk has built his factories inside the United States. He proved to everybody, to all of those companies that shifted their manufacturing outside the US, that it is possible to manufacture your stuff in the US. I mean, if you can manufacture cars in the United States like Tesla is doing, you can manufacture anything in the United States. I mean, Elon Musk is manufacturing rockets in the United States. Why can't you manufacture your smartphones or your TVs in the US? Just build efficient supply chains and you will pay a lower taxes because of that. Now, that is not enough, because another thing that Trump wants to do is that he wants to impose tariffs. Because even if you bring manufacturing to the US, what happens is that your cost is still going to rise. You will pay taxes on the net profit. You don't pay taxes on everything else, which is why what Trump wants to do is that he wants to impose a high tariff on all the goods that are coming out from outside the United States. So even if your cost goes up slightly, the foreign goods are going to be more expensive because they will have a very high tariff. For instance, Tesla can simply sell their cars in the US and is not afraid that China can manufacture cheaper electrical cars, because those cheaper electrical cars from countries such as China will have 100% tariff coming to the United States. So even though it's much cheaper to produce them in China, by bringing them and shipping them to the United States, you will pay an extra 100% tariff. So compared to them, suddenly Tesla seems a much better price competitively option compared to those Chinese cars that are produced at a cheaper price. Yes, from another perspective, the consumers are suffering slightly to a certain extent, but that actually protects US companies. And when that protects your company and your sales starts growing up because of that, what do you think happens to your valuation in the stock market when you're making money, when your balance sheet shows that you've actually made much more money than you did last year? Your valuation in the stock market is going to grow as well. And that is some of the ways that Trump looking into bringing jobs to the United States, bringing manufacturing to the United States, making sure that the stock market actually grows. So what I expect from the stock market in the foreseeable future during the Trump presidency, based on what he said, that there is going to be a lot of spending in the US. Now, when there is more spending means companies make more money, means higher valuation. Why there will be more spending? Lower interest rates that are coming. They're already happening. So we might actually have them now. The Fed has already lowered down interest rates twice this year. So don't be surprised if it's going to lower it by another 1% or 2% in the next year. Bringing manufacturing to the US, more spending in the United States, growing the economy, growing the GDP, and growing the stock market as well. So I wouldn't be actually surprised if the stock market is going to hit all-time high. Now, I can't really say about the long-term consequences of the policies that Trump is going to take during his presidency. Maybe they're going to be negative. I don't know. I haven't really taken a deep look into them. But within the next 4 years of Trump presidency, I think there are going to, the stock market is just going to go to the moon, as they actually said. So if you haven't actually started investing, I guess this is the best time, because the last 2 years, if you didn't actually invest, yes, there has been a lot of opportunities, but nonetheless, the market hasn't been growing as much as it could, for example, in 2019, in 2020. But right now is probably the best time to start investing and growing your investments. But if you need help with that because you don't know how to start investing, if you are looking into how do you actually get your first $100,000 in the stock market, then you can check out the first link in the description. Thanks guys for watching, and I will see you in the next one.